How is Bitcoin going to help people live an extraordinary life, Pomp?
I think one of the biggest dangers in American society is a lack of education when it comes to personal finance. But most people would think that that requires an understanding of spending less than you make or maybe staying out of debt. But the thing that negatively affects the most amount of Americans is actually inflation. And so if you look at the numbers, 50% of Americans have investments. They hold things other than the dollar, whether that's stocks, bonds, currencies, commodities, crypto, real estate, et cetera. But 50% of Americans just hold cash. They live paycheck to paycheck. Every single dollar to their name sits in a bank account somewhere. And so when we have inflation, even at just officially 2%, but if it spikes to over 9% as it did in recent years, it eats away at the purchasing power of the 50% that just has cash. And so the wealth inequality gap continues to expand and get worse. And people who don't have a lot end up falling further and further behind. People who do have a lot end up getting ahead. And so Bitcoin and the promise of a decentralized digital currency that is, not debasable, cannot be seized, and also is not controlled by anyone, is that it can protect your purchasing power. And so if it is able to protect your purchasing power over long periods of time, you now have essentially created the ultimate savings technology. And something like gold historically has served like this, but there's a lot of friction to being able to buy gold, right? There's physical gold. You've got to be able to custody it. You have to be able to source it. It's heavy. It's not portable. There's all these issues with it. But something like Bitcoin in a digital form provides that same sound money principles. And so this idea of a quote unquote extraordinary life really just boils down to, are you able to retain the economic value that you worked hard to obtain? So the retaining economic value that you already worked to obtain. If you have investments, you're able to do that. If you do not, you're not able to do that. And something like Bitcoin makes it dead simple for people to be able to understand. Simply earn in dollars, save in Bitcoin, and continue to live your life. And what we have seen so far over the last 15 years is that's been a really, really good decision for a lot of people.
How long do you think people have, people are like, oh, it's too late right now to get in on Bitcoin. How long do people have? I mean, people are like, oh, it's too volatile. How do you typically respond to those comments?
Well, I think education is such an important part of this. So if you think about, timing, when I started looking at Bitcoin and cryptocurrencies in 2016, which was the second time I looked at it after really just kind of ignoring it, the first time, I thought I had missed it. I thought I was late. Right? It was 7 years into this thing. Oh my God, all my friends have already done this. I'm so dumb. Why didn't I, pay more attention the first time I heard about this? Man, I was early, right? And so if you think about from a timescale standpoint, people who end up buying Bitcoin or using Bitcoin 50 or 100 years from now are going to think of people today as being early.
Yeah.
Right? And so if we were to go back to the US stock market, 20 years in, 50 years in was still pretty early. And so I do think that it's just, what is that time perspective? And then in terms of things like volatility, nobody thinks that the dollar is volatile, right? Kind of $1 equals $1. And so when we wake up, we just think, how much can I buy using this $1? But if you look at the exchange price of the dollar, man, there's a lot of things that seem to be getting much more valuable than the dollar. And so real estate goes up, stocks go up, all that kind of stuff. And so the dollar is crashing. What people tend to associate with being volatile is the Bitcoin exchange price for dollars. And so one way to look at it is Bitcoin is volatile, but another way to think about it is the dollar is volatile. And so it's all about perspective. It's all about education. But the nice thing is Bitcoin doesn't really care what anyone thinks.
Right.
It's simply going to continue to, produce block after block of transactions. And over time, I think that it will be more valuable than it is today.
And when it does become more valuable, volatility will probably decrease at that point because it's stabilized. Do you agree or disagree with that?
Well, that's just what history shows us, right? Yeah. Already you can see that Bitcoin's volatility has been coming down. Obviously, if an asset gets bigger, it's much harder to go up thousands of % than it was when it was small. On top of that, you also are starting to see kind of in the bull markets, we now have enough of them where we can see that each bull market tends to be smaller on a percentage basis of upside than the one previous. And so that doesn't mean that it will always follow that exact pattern, but that is part of the volatility coming down. And so if you want mass adoption, you're going to get large institutions and many, many different players at the table. If you get those large players, you should expect the volatility to come down. And so that's just kind of the natural progression of any financial asset.
Love it. And I guess, so correct me if I'm wrong here, but part of living an extraordinary life, and we'll come into your book in a second, is to own assets and hold them for a very long time.
I think that is one, strategy. One of the things when you write a book about kind of the lessons you've learned is you have to be careful not to project advice onto other people. I don't know their situation. I don't know where they come from. I don't know kind of their perspectives. And so when I wrote this book, it's, 65 letters to my children about my life experience. And there's a little bit of a play on words of like how to live an extraordinary life, because the truth is what an extraordinary life is to me may be different from you or somebody else. And so this is my experience, my lessons learned. And in the book, when I open it up, I describe the idea that each one of these letters needs to be evaluated individually, because in the book, sometimes the letters will be complementary of each other, but also sometimes they will be contradictory to each other.
Right.
And so there's these two letters that I put together in the book. One of them is all my rich friends sold too early. This whole idea that like so many people I know buy an asset and they think it's going to go up forever. They never take any chips off the table. And so on paper, they got rich and then they went right back to where they started. They kind of round tripped the whole thing. And so I have many friends who have been quite successful in saying, every time the asset doubles in price, I take half off. They quote unquote sold too early, but they were able to capture a return and put it in their bank account and then go find another investment. The next letter talks about the kind of Warren Buffett perspective, which is find great assets and hold them forever. And so those two things are both true. The hard part in investing is figuring out which are the assets that I should be selling too early and then which are the assets that I should be holding for a long time.
Yeah.
But it goes back to this kind of lesson that is implicit throughout the book, which is there are many ways up the mountain. Mm-hmm. There's many ways to be successful, many ways to find kind of your own extraordinary life. What you have to try to do is take these life lessons, figure out which ones are worth applying in your life, and then follow those, ignore the ones that maybe aren't a fit.
And where did you draw the inspiration of this book from? Because I remember the Rockefeller book where he wrote 38 letters to his son. Is that where you drew the inspiration from, or where did it come from?
No, after I started writing the letters, then my brother actually brought up the fact, because he was reading that book and he was like, oh, dude, I love this book, whatever.
Yeah.
And so I was like, let me go back and read it. And I actually had forgotten that I'd ever even read it. But my wife, when my first child was born, was adamant. Please write her a letter. And so I wrote one, but it was kind of like hey, I'm so excited to be your dad. Not really kind of life lesson driven, and more so just, I was excited.
We're going to have so much fun.
Yeah, I was excited just to be a dad, right?
Yeah.
And so when I think it was her first birthday came up, my wife was like, you should just like write another letter. And I had seen stories of people, they send their kids an email to an email address they've set up for like 18 years, and then their kid gets access to the email or whatever. I always thought those were kind of cool. But more so the driver, I think, of maybe for the first time in my life, I listened to my wife was... I always had this, kind of overarching feeling that I was never going to make it to 35 years old. And that's how I opened the book, because I described this life that I used to live when I was young and single, which was just kind of a fast life. And not necessarily that it was like completely, I was violating some crazy rule or being a complete degenerate or anything. But, I had a motorcycle and I used to drive fast. I was in the military. I deployed overseas. I probably like to party, right? And I like to have fun and do all these things that I think most people would kind of objectively look at and just be like, oh, that's like a young single dude who's having fun in life. And yeah, he probably is taking a little bit more risk than otherwise would be, kind of prescribed. But I bet you he's loving life, right? And so whenever people would talk to me about, what do you want to do in your life or whatever, I just had this overarching feeling of like, I'm not going to live past 35, so I better cram it all in now. And if you go back and you look throughout my life, whether intentionally or not, I just got a lot done. And so when I hit 35, I started to think to myself, I'm like, oh, I've written one or two of these letters now. I never thought that I was really going to kind of make it to this point. Anything from here is kind of icing on the cake. And so God forbid something happens to me, tomorrow, what is the advice that I would like to leave to my kids? And so I wrote one letter, I wrote another one. And after like maybe 7 or 8 of them, I think I realized I was like, oh, this could like become kind of a collection of them. My wife had just written a book. And so she was very much pushing me to say, hey, look, why don't you take these? And if you kind of hold yourself accountable by saying you're going to publish a book, I know you'll actually write the letters. If not, I don't know if I would have ever actually written them. And so ended up writing 65 of them, and book comes out, and we'll see if people like it or not.
This week, right?
Correct.
Oh, wow. Okay. Congrats. So just to back up a second, that book, 38, the 38 letters from Rockefeller to his son, it's great, right? It's like a pretty, I don't know, it's like a book that you want to come back to all the time. And it sounds like that's something that you've written. And you know what's interesting? I did this with my parents recently, so I haven't done something like that. But now from you, I'm now inspired. But I go to Amazon, I buy my parents this book about like things for it's like letters from my mom or whatever, and then she's forced to write letters for like 5 years old, 10 years old, 15 years old, right? So you get your parents to do it, the grandparents to do it as well. But I digress. What do you think because I guess we started off with like making money from Bitcoin and investing, what do you think your 3 top letters would be as it relates to that? You kind of talked about 2 already.
Yeah, one of the funny things about kind of, quote unquote, making money or capitalism is every great investor I know is a philosopher. They try to think about life. They try to think about decision-making. They try to think about ethics. They try to think about history, right? They're kind of like almost like a polymath, but through this philosophical lens. And so, you could argue that Bruce Lee and the lessons of like, be like water.
Striking thought.
Yeah, I mean, you just go through all this stuff, right?
Yeah.
Is very similar to maybe a Jocko Willink, who is, a Navy SEAL commander, to a name your favorite investor. And so really what I like to think about my day-to-day is how do we create an environment where I can learn as much as I can, and I enjoy that, I get energy from that. But also, how do I create an environment where it's a great place to think? And I recently read this in a book, that phrase, it's a great place to think. And it was somebody talking about, they were an analyst at Geico, which managed a massive investment portfolio. And one of the things that I found just so fascinating about that is everyone is always so focused on what is the thing that we got done. But the best investors actually have time to think. And I think that there's something Naval Ravikant said, which is you should get paid for the quality of your thoughts. And so you start to kind of put this stuff together and you realize, okay, so much of investing has nothing to do with investing. It's just about becoming a mature, intelligent, kind of open-minded person who's able to take all these inputs from the world, synthesize them, and then come up with understandings of where the world is going to go and positioning yourself to benefit from that. And so I say that because the 2 lessons that I said earlier are directly involved in investing. One of my favorite letters is that go for a walk outside. And it's so simple, but whenever I am facing some sort of issue, I'm stressed out, I'm trying to think through something, I will go for a walk outside and I will intentionally not have a headphones in. I won't listen to a podcast. I won't do anything. I'll just go walk. And so I started Googling around saying like, why does this work? And then there's a bunch of science that shows walking, but not just walking on a treadmill. That can be helpful, but actually walking and moving forward, having all of the inputs around you, whether you're in a busy city or a rural area that's quiet in nature, the body is built to start to make connections in your brain that it would not otherwise do. And some people say that it's because there's blood flow, and so there's more blood going to your brain. All these different kind of theories about it. For whatever reason, when I walk outside, all of a sudden I get new ideas, I solve problems, and I get things done that I've been thinking about all day. And so investing is important, but so is simply figuring out what is the best way that I think, because that will open up your kind of solutions for whatever problems you face.
Right. And I'm assuming because you have, if you have a letter in there talking about walking, you have a letter in there talking about taking care of your health overall, taking care of your mind, all those things, right?
Yeah. Again, part of the challenge of writing a book like this is, I'm writing it for my kids, but I also want it to appeal to people kind of on a broader audience. And so there are letters in there that I would say are directly applicable and valuable to some of my most intelligent, kind of elitist friends who would look down on, all these other types of books that are kind of self-help or whatever. And then there are lessons in there that frankly are applicable to every single human in the world. Right. And so how do you write a book that balances between appealing to kind of the finance or business community and really having things in there that are applicable and valuable to them, but also being able to kind of hit a general audience where regardless of what your job is, your education level, your income, what location you live in, this is something that can help you. And I think that we tried, as best we could for me to strike that balance.
Got it. So I guess let's talk about the business of the book and then your actual business, because, you have a whole operation going on here. So what are the outcomes that you're seeking from the book? Or is it all icing on the cake?
I mean, I think people who understand book kind of business, it's very hard to make money. I did not sign a deal. I worked with Harriman House as the publisher. I didn't get an advance. I didn't want an advance. The way that we created this book was very unique. If I was optimizing it to sell as many copies as possible, I would put a cover together that would be, kind of eye-catching. We would put as many quotes as I possibly could from all of my friends saying how amazing the book is and how amazing I am. But if you look at the book cover, it's actually a very timeless cover. It doesn't have kind of your traditional plastic kind of book wrapper. It is just engraved right into the book. There are no quotes. There are no testimonials. There is nothing other than the title, my name, and a small image. And the idea is this book is going to live or die based on the substance of the book. And I have no clue if people are going to like it or not.
Right.
But ultimately, if I was doing it for money, we would have taken a very different approach. But if you're doing it to try to create something that is timeless and something that people can pick up and they can read one letter and find it valuable, then you do it the way that we did it. And I think that's what we're optimizing.
You're going for Lindy.
Well, it's just, look, there are other books like this that I've really enjoyed throughout my life. One of the books that, I think is fantastic, a lot of people have probably never read, is a book called Rules for a Night. And Ethan Hawke wrote this book, and very similar, right? It's a very timeless book. It had a profound impact on me, and so I wanted to write a timeless book that I felt was going to be valuable to people for a long time, but do it in my own way. And so rather than write kind of a story as he did, I wanted to write the letters and kind of package it in a certain way. And there was people along the way. Some of the folks who worked at the publisher thought, great idea. We love this. And then there was people at the publisher who thought, hey, we don't like this. Maybe we should do it a different way. Country by country, right? You get feedback from book buyers. In some countries, they say, hey, we don't like a black covered book.
Yeah.
Right. That signals kind of a negative thing in our culture or our society. You should go with this other color. And we kind of go around the world. And what I found so fascinating is I didn't know that color was seen negatively in a certain country, or a different color was seen as positive. Right. I didn't know that certain things were done in these countries to optimize for the receptivity. And so it was this really cool journey where everyone was kind of looking at it as like, I created the book, but I was looking at it as like, now this is a thing that is I'm going to put out in the world, but I'm going to learn in response. And the book process was one piece of that.
All right, quick note. This is about my company. It's called Single Grain, and Single Grain is an ad agency where we're focused on driving innovation. And so I want to talk about a couple of new strategies. And if you need help with marketing, great. If not, here are a couple of new strategies that you should try out. One is programmatic CRO. So we are doing programmatic conversion rate optimization on our site. We're building products that will automatically optimize your site to increase conversion rates. We're also auto-optimizing, auto-updating from an SEO standpoint. And we're constantly thinking about what else we can do in terms of enriching the visitors that are hitting your website and also tailoring custom messages for them using AI. And so there's a handful of things that we're doing from a marketing standpoint, and our mission is just to drive more innovation. So if you want to learn more, just go to singlegrain.com, grain like rice. So singlegrain.com to learn more, and we'll see you inside. And so I guess maybe we'll come back to the book in a moment, but actually, so you have an email list, you have a couple 100,000 people on it, right? Like, I guess, how are you, let's nerd out a little more on it. How are you pushing it right now? Are you just pushing it to the list? Like, how are you marketing it?
Man, every single person on our team wishes that I was more focused on pushing the book. And look, we
had a conference this week too.
Yeah, we got a lot of stuff going on. We also got a lot of businesses, right, travel and all this stuff.
Yeah.
But again, it kind of goes back to, I understand that when you write a book, you have to market it, right? That's not lost on me. But I kind of have this just belief that if we wrote a good book, word of mouth will be the best salesperson. And so, yes, we can probably help around the edges in terms of tweeting about it, posting it, putting in the email, doing a podcast episode, whatever. Mm-hmm. But at the end of the day, the best books simply grow through word of mouth. And so similar to software or CPG or whatever, there's no better marketing than having a great product that people love. And so let's see what happens. People may like it. People may not like it. I don't know. But we're going to find out this week, right?
I love it.
And then on top of that, the other thing I would say is I do have a big audience. But as everyone with a big audience knows, you would be shocked at how small the conversion rates are, even when you create things that you're like, they're signed up to read, from me or listen to me or whatever. I created this thing. It is an embodiment of me. Hey guys, don't you want this thing?
Crickets.
And people just go, delete email. I'm busy. I'm driving my kid to school, whatever. Right.
Yeah.
And so, yes, it does help to have a big audience. You can get the word out there. I've got a lot of friends with big audiences. I can go to them and say, hey, can you help me here? Whatever. At the end of the day, it's just going to be, is the product something that people want or not?
And maybe you can use that favor. You can save that favor for some other time.
Well, it applies to everything, right? If we launch a company, if we, I'll tell you a great story. We recently launched a business. It's called Buy Buns. 1 in 3 Americans have a very acute pain in their foot, usually related to a bunion. A lot of it comes from us having shoes that have become narrower and narrower over time. And so if you have these bunions, it's painful, but also it can start to affect balance and foot strength. It can also lead to surgery. The surgery doesn't necessarily always kind of fix it. There are people who get the surgery, then they don't do anything, and they end up actually going back to having the bunion. They have to have the surgery again. And so there's a gentleman that we partnered with who helped us create a kit. That kit is specifically targeted at the 1 in 3 Americans that have this foot pain. And so that's a product that's a little bit outside of my wheelhouse in terms of finance and kind of traditional business, et cetera.
Yeah.
But I thought it was a really important problem. I thought we had a unique advantage in terms of we had somebody who knew what they were doing. I was very dedicated to this. We had capital that we could kind of put behind the business, and we have distribution. So let's go see if we can figure this out. It was our first foray into e-commerce. So there was a lot of learning, which I enjoyed, kind of intellectual stimulation. And we worked at it for months. And we felt like we got the product to a good spot. We went a whole 30 days and we were profitable. And, we felt like, okay, we figured this out to a degree. Let's go ahead and announce it publicly. And we announced it after I had sent a bunch of kits to my friends and all this stuff. Not one friend posted about it. Because how many of your friends are good enough friends to post their toes on the internet? Not that
Zero.
many, right?
Yeah.
And so it, again, goes back to, you can have all the friends in the world. You can have all this stuff, right? I'm not going to go harass my friends by, hey, man, you're going to post, whatever. Yeah. But what you realize is again, the product is either going to win or die based on whether it is good or not. And so I'm coming from somebody who worked on the Facebook growth team, somebody who's been obsessed with, how do you optimize things and measure and, chase these metrics. But over time, I've just come down to the market will tell you you're good enough or you're not. You can optimize around the kind of edges, but 90% of whether it takes off or not is literally, did you build the thing that people want?
I love it. I mean, that's a longer term way of thinking versus everyone needs it tomorrow type of thing, which kind of leads me to your business, right? So it's funny because I was checking in to come up and I was looking at the, I was like, something capital group. I was like, what the hell is this? Right. And so I walk in and then, there's apparently you have an incubator here, you have your office, and then there's a podcast studio here. You have a big conference happening this week. I think you have a crypto job board as well. There's just a lot of stuff, right? So can you help me unpack the business of Pomp right now and what is the focus?
Yeah. If you look at where I am in my life, I've had a lot of different experiences. We've been very fortunate to, I think, find a lot of great investment opportunities and compound capital at pretty attractive rates, both personally and professionally. But I am at the sweet spot of I've got just enough experience to be somewhat dangerous, but I'm still young enough where I can think in terms of 30 or 40 years. And so what I did over the last couple of years is I kind of reset and said, I want to design a investment firm that is built to compound capital for decades to come. And so in order to do that, we are going to have to do things our own way. We're going to have to be very intentional about every decision we make. What is the culture? How do we think about what are the inputs? Who are the types of people we want to work there? What are the strategies we're going to pursue? What is the communication style that we want? All these little details. What is the aesthetic of the office? All this kind of stuff. And then we are going to have to figure it out. And it's kind of this learning journey. And so today we can basically split the business into 2 different components. There is the incubations. Those incubations, we have done 9 of them now. These are usually us providing 100% of the capital. We're partnering with someone. When we partner with someone, it usually entails a very aggressive equity kind of allocation to that individual. We look at them as a co-founder. We create a business. And because we are bringing capital and distribution, we have some advantage in the market, and we've been able to scale these businesses quite quickly. Now, these businesses to start are not businesses that I think will become billion-dollar, software giants. Instead, what we are looking for is we are trying to get to profitability within the first 6 months. And if we can do that, we have created a cash flow machine, which then gives us non-dilutive capital to either reinvest in that business, to invest in the public or private markets, or to go start another business. And so by creating that machine, we now have some cash flow. And I would say that the cash flow is nice, but in the grand scheme of things, and especially compared to our ambition, still quite small. But it's non-dilutive capital. And so it's like we're fundraising every day, just a little bit of capital. Then the second part of the business is investing. And then on the investing side, I think that's what people really know me for. That's really where I've kind of cut my teeth and built a reputation. And so far in my career, I've been fortunate to find a number of investment opportunities that had the perfect ingredients of they were different and they were right. In order to continue to find those opportunities, you have to be obsessed with learning in general, but also trying to seek out those opportunities. Now, these opportunities are usually not sent to you by someone in a private equity firm in a nice polished deck. They usually look really weird. They usually look like something that the private equity firm doesn't want to touch.
Yeah.
And so one of the challenges in finding these opportunities is you find them, you have very high conviction, but you bring them to other people. And because they are non-consensus or contrarian, people say, that's crazy. What are you doing? Like, I'm not investing in that.
Right.
And so what you have to be able to do, again, if you think long-term, is where do you get the capital to continue to invest in these? Sure, I can personally invest in stuff, but everyone's got some finite amount of money. And so by looking out over 20, 30, 40 years, if you can build a machine that throws off cash that you can constantly use to go and find these new investment opportunities and then allocate to them, if you can build a track record of finding them and being right, then over time, getting capital is easier, but you need the machine in the beginning to be able to kind of do this. And so that's what we've been doing for, almost 3 years now. And so far I'd give us maybe a B plus, going well. I think that I'm pretty happy with the general direction of travel, but you always wish that, you're doing better and kind of going faster and seeing even more success. But, so far, so good.
What are like 3 examples of your 3 favorite companies that you've incubated and whatever numbers you're happy to share, like how are they all doing right now?
Yeah. So I don't know that I have favorites as much as just, I can give you kind of maybe 3 examples that really, kind of showcase what we've done. So one is very publicly known. We sold a company to a publicly traded business called DeFi Technologies, a Canadian publicly traded asset management firm. That company was called Reflexivity Research. Myself and a gentleman, Will Clemente, started that business. It was basically a research business focused on the crypto industry.
Is he in here?
He works out of our office sometimes.
Okay, got it. Yeah.
And so in that business, we started it and we thought what we were going to do is we were going to create a research firm. People were going to pay us directly for research. And we launched, we both had big audiences, all this stuff, and almost nobody paid. Like very, very few people paid. And we
I didn't know you had that.
Oh no. Did we make a mistake? Right.
Yeah.
And what we realized very quickly is one, you got to build trust with people, right? You got to be able to kind of show them the value and do this stuff. But also we started to explore other monetization. And so what we realized is maybe we shouldn't go B2C, instead we should go B2B. So we started signing bigger contracts that, maybe average deal value was like $50,000. And we started to stack up these contracts. We hired a salesperson, a guy named Clint, who did, a fantastic job going and doing outreach and start to build a B2B, sales process. And how do we prospect? How do we work people through the funnel? How do we close? How do we price? How do we deliver the service? All this kind of stuff. And so after about 18 months, we had signed just over $1 million of contracts, if I remember correctly. But I knew that we were, from a cycle standpoint, leaving a bear market headed into a crypto bull market. And so given my past experience in these kind of cyclical industries like crypto, I knew that I wanted to have public equity exposure, not private equity exposure in a bull market, because there is liquidity in holding that public stock versus the private stock. And so I have the battle scars of round tripping so many things over the years of, wow, look at this private company that's done so well, but unless we can find someone to buy it, you can't capture the value. And so we were able to do a deal, which on paper, we sold a company that had over $1 million of contracted revenue. And if I remember the exact details, we sold it for somewhere around $2.5 million.
Great.
And so most people would look at that and say, what are you guys doing? this is insane. Why would you ever sell this business, which is going to throw off hundreds of thousands of dollars of free cash flow for $2.5 million? Obviously, you're getting ripped off. What they didn't realize was because we were able to operate and also invest, we had done a deep dive on this particular business, and we were able to see that we thought, from our personal opinion, it was drastically undervalued in the public markets. And we had a whole bunch of reasons why. We thought that they were going to, one, continue to grow revenue. Again, in a crypto bull market, revenue grows for a lot of these businesses. Two, they had a very unique business model, which you could just go read the filings and see what their business model was, and people didn't quite understand that. And then three is it was trading in Canada. And so there's a lot of US investors that just don't look at companies in Canada. And so long story short is we sold the company. We did a 100% stock deal. And so when you look at that, everyone always says, you sold it for $2.5 million and you took 100% stock, you took no cash.
Yeah.
And we said, of course we did. Because the sale of that business was no different than us making an investment decision. And so now you can start to see where these two sides of the business, where we incubated something, we had an asset, but we were able to think of from an investment perspective, who do we sell to?
Right.
Depending on when this goes out, that stock is up hundreds of % since we sold that business. Now, they also continue to drastically grow revenue. They started to really, I think, kind of focus on what is their business going to be, crypto prices, right? Like there's all these, tailwinds that happened. But that is a great example of how incubation and an investing mindset or framework put together really allowed us to create incredible return on capital. Now, our challenge going forward is the return on the capital we put into that business on paper looks amazing, right? And because it's a liquid stock that we can capture, but it was a really small amount of money.
Right.
So one of the challenges that people have seen over the years is how do you continue to do this business model with bigger and bigger checks? Now, Constellation Software is very interesting because Constellation, they don't incubate, they acquire. But they have kept the acquisition kind of value very consistent. I think it's around $5 million. And so
most of them were much smaller to begin with. Yeah.
Of course. Yeah. And so like if your average is 5 million, sure, some big ones pull the average up and some are pulling it down, whatever. But that shows you that you don't necessarily have to go upstream. And so, there's a world where if I got very ambitious, I said, hey, well, if we've done 9, I would just do 100.
Yeah.
Now, I don't know if I really want to help manage 100 businesses that are all doing, $2 to $5 million in revenue, throwing off, $1 million or $2 million in free cash flow. Like $100 million in free cash flow sounds awesome. I don't know with 100 businesses though.
Yeah.
And so, there is some, kind of decision making that we need to make. Do we start to go upstream a little bit? Do we continue to kind of do this? But we've done it enough times where we have confidence. We know that we can incubate companies. We can get to cash flow positive within 6 months. And the amount of capital that we've been putting into these businesses has shrank over time. And so the ROI from an investment perspective is very attractive.
Yeah.
Can you do it by adding zeros to the number you invest? So if you do it with 100K, can you do it with $1 million? If you can do it with $1 million, can you do it with 10 million? If you do 10 million, can you do it with 100 million? Obviously, the percentage return will go down, but if you can make 2 or 3 times your money on $100 million, that's still pretty attractive, right? And so that is kind of the journey that we have in front of us over the next couple of years, is figuring out what is kind of the perfect combination to unlock value in this manner.
Got it. And how are you structuring these deals, and what would a good outcome look like? Are you putting like $100,000 in for like 10%, and like a good outcome is like $1 million in cash flow? You're like, what does it look like to you?
Each deal is different. I would say generally we look at it as we are co-founding a business with somebody. You can think of this maybe as I am being overly gracious and really allowing the team, our investors, et cetera, to kind of participate alongside me. I always think, very hard about if I'm going to play a game for 30 or 40 years, I want to take care of the people who are around me and who have backed me. And so when we do that, it's almost like I am co-founding a business with X person, and we will fund, pretty much all of the initial operations. We have gone as high as $500,000. We've gone as low as $50,000. So, there's a little bit of a range there. And I would say that in each of our businesses, what success looks like is different. But one of the core kind of tenets that I have that is common across all of them is we have to be profitable, right? These are not businesses that can afford to raise lots of money, burn, and like we'll make it up later. we have to be profitable in order to have oxygen in these businesses. And so we have a company that we really didn't incubate. Somebody else started it. It was kind of going okay. We went to them and we said, hey, we're going to start a business. You're kind of a one-person show right now. Why don't we team up? You'll be the founder. We'll kind of like step in and we'll buy half the business, very small amount of money. But we'll kind of come here and we think that together as partners, we can go and we can grow this thing. So, kind of half acquisition, but like half incubation. There was no big contract of like, we're going to acquire half the business or anything. It was kind of like, over email, hey, let's do this.
Yep.
That business today does more in profit per month than it was doing in revenue when we got involved.
Wow.
And so you look at that and you say, well, it was kind of a small business, right? So like, that's not super hard to do. But what it did show was we are able to go in and get these businesses kind of cranking. And then what you do is you use that cash flow and you can hire more people. The team has grown. We can take that cash flow and we can reinvest it in other things in that business. We can take that cash flow, we can go and we can invest in the public or private market. We can take that cash flow and we can go start another company. But cash flow is so important when you're doing this that we optimize for that over everything else. And so most of our teams, I don't think we have a team that has more than 10 people, any of our companies, but they're all profitable.
And the people here, are these people sitting outside, are they just starting out? Are they kind of earlier in the journey?
Each one of them is different, right? So some of our teams, 100% of the team is sitting in the room right next to us because there's two people who work at the company and they sit across from each other, right? And then we have some teams where we have one team, we don't have a single person in the office. It was a team that we actually acquired this business as well. They probably have, 9 people or so, and they were a remote first company. I prefer in office, but I'm also hopefully smart enough to know don't meddle in something that's working, right? This team was built this way. The leadership stayed on. Like we think very highly of them. They're doing a great job. Just leave it how it is. And so what I think is now becoming interesting is because we're in New York, talent, there's a higher density of talent here, but also talent costs more. And so we start thinking about, well, what are the things that we need in the office? What are the things that we could outsource? What are the things where maybe remote employees make sense? What is the cost difference, right? Now you start getting into this world that is very, very different than maybe people historically have kind of faced when it was just you hire from your local, area, you bring them all into the office. The cost is the cost, and you don't even have the option to go elsewhere. But we're kind of working through that stuff now.
So dude, what's your mindset on we saw Amazon's whole, 5-day return to office thing, right? I mean, I've been saying on my other pod that, secretly behind the scenes, all the founders are like, they would love for everyone to come back to the office, right? But I think it's nuanced. So like your philosophy, is it like you have your lieutenants in the office with you and then maybe case by case basis, you can have people be remote? Like, how do you think about it?
Yeah. One of the things that's probably interesting about the way that we have set everything up, again, going back to the intentionality, is we have very few executives. We pretty much have a CFO. And outside of a CFO, there is no, chief marketing officer. There is no name your, kind of C-suite position. Instead, what we have done is we have created a very decentralized organization. So each business that we've started has a CEO. That CEO is responsible for that company, and decision-making is pushed down to those people. And also, they then make the P&L decisions. They begin to allocate resources. They begin to kind of be as close to the problem as possible. And so when you put that kind of all together, what you begin to see is that different companies make different decisions, but also resources get allocated very differently. It is not here's the budget that I have for this year, I got to use it all. When you are responsible for a P&L, and some of your compensation as an owner in the business is dependent on profitability, you don't buy some of the things that you previously were going to buy.
It's your baby. You're going to treat it like an actual founder.
Yes. Yeah. And so, one of the jobs that I think I have, kind of running an organization like this is, how do I teach? And usually I don't have the answer. And so I got to do one of two things. Either I have to connect somebody who's got an issue or needs to get better at something with somebody who is an expert. And I got to call one of my friends and say, hey, can you come and, help this person learn X skill? Or I got to go figure out where that information and knowledge is and then try to bring that to them.
Right.
But if I can spend time leveling up the leaders of each one of these companies, then all of a sudden those companies get better. And I see it. We do, I try to do it once a month. Sometimes we've done it more frequently, these lunch and learns. And so we'll do one on sales or on marketing. And we'll talk about very tactical things among the leaders of these businesses that we learn in our business. So we'll say X company has created a system or a process that does 1, 2, and 3. And here's the logic behind 1, 2, and 3. And then you'll see somebody else say, oh, that's a great idea. Let me go implement it in my business. Or somebody will push back and say, well, that works because that's a consumer business. I sell B2B and I actually have realized that 1, 2, 3 doesn't work, but 4, 5, 6 does. And here's our logic. And you create this environment where people are learning and sharing information. And what that does is it helps everyone in the room level up. But 2 is we essentially have 9 experiments. And every experiment is learning, implementing, getting feedback, learning again.
Yep.
And if we can then share that as a overall group, we should be able to compound that learning over years and years and years. And so that should help each business accelerate without taking on the increased headcount and monthly spend that most businesses do, right? If you want to learn more, usually what you got to do is you got to build more or you got to test more. But here, what you actually can do is you can run the experiments you were going to run with your small team. Somebody else is running other experiments, and then we come together once a month or whatever the time frame is, and we're going to all share those ideas, and then go back to our kind of perspective corners, go run our businesses, and then we'll do it again.
Got it. So let's just call that like a monthly mastermind, right? And so one, you guys provide capital, know-how. There's the group situation. Like, what else are people getting from kind of working with you?
We're winners. That's the number one thing. I tell every single one of our founders, I'll never let you fail, right?
Now, nobody's failed yet.
No.
Okay.
They're all profitable, right? Now, why will I not let it fail? Because every business that we start, I'm very intentional about. It's a business that I know that if absolutely I need to, I can spend 100% of my time and I will make it successful. But the whole promise and the whole, kind of idea of a partnership is I'll never have to do that. Because our founders are so strong and they're constantly improving and they're constantly, the closest to the problem, the number of times they have to call me dwindles down over time. And so I always say that like our job is to put a business into business and then eventually get fired. And we shouldn't have to be super involved and do all this stuff, because now what we've basically done is almost every one of our businesses, not everyone, but many of them, most of them, we took somebody who was an expert at something and was already doing this job. They just were locked in the wrong kind of structure. So I'll give you an example. We started a business called Resi Club, ResiClubAnalytics.com. And there's a gentleman, Lance Lampert. I think, and many people in the industry think, that Lance is the #1 residential real estate reporter in the country. He was responsible at every company that he's ever worked at for a serious amount of the traffic. And Lance is what some people would call a data journalist. So Lance does not write, I think the housing market's going to go up, I think the housing market's going to go down. Lance instead says, hey, I went and I pulled a bunch of Zillow data. I did my own proprietary analysis. I created my own charts and graphs, and I'm here to present it to you. So think of this almost as like a Bloomberg for residential real estate. But the secret of Bloomberg is you got to have the data, and then you got to have the kind of insights pulled out of it and writing around it. And so we created a business that does this. Now, Lance is actually a pretty entrepreneurial person. I think he really enjoys not only the kind of data journalism, but also he enjoys talking to people from a sales perspective. He enjoys talking to people who are subscribing as a paying subscriber, et cetera. We're putting together an event, and he's really enjoying that part. But Lance also worked at a great company. Lance got a family. Right? There's all these things that are kind of friction points for somebody leaving and starting their own company. Somebody like us steps up and we say, listen, we'll provide a safety net. We'll provide the capital. You don't have to go fundraise. We'll provide all the infrastructure. We bring operational help in terms of finance and legal, different operational things. Then also, we have all the lessons learned from these other businesses that we know the exact playbook. Let us show you why we do certain things. Let's talk about pricing. Here's what the price points that we've realized unlock the, kind of corporate bank accounts versus the individual bank accounts. Let's talk about how our other businesses can actually help fuel your growth, because now we have enough businesses and enough people with big enough audiences that we can start to actually recommend among each other. All these little details all we're trying to do is crank on the probability of success. I can't promise you it's actually going to be successful, but I can tell you that if you partner with us, there's a much, much higher likelihood that you're going to be successful. And most people want to optimize for probability of success over owning 100% of a business.
And 99% of people just don't want to take the risk up front. So you're really de-risking is a major benefit.
I almost look at it as, what if you could get all the benefits of a job with all of the upside of being an entrepreneur? How many people would take that deal? Many.
Vast majority.
Many,
yeah,
right?
Yeah.
And so what that is on us is we have to be very clear on expectations. And so with many of these businesses, what I tell these people is I will fund this for 1 year. I know what the 1 year is, right? In terms of cost. Here's the amount of money that I'm willing to put in. I'm going to put in the bank account and we're going to go. If we need more capital, we'll talk about it. Maybe I'll put more money in. Maybe I won't. Thankfully, we haven't had to put more money in.
Yeah.
But you know what you're getting from me. And I'm going to work my ass off and I'm going to do everything I possibly can to help make you successful.
Right.
And so when you do that, people realize, hey, there is some risk. You're still betting on yourself. I don't want somebody who is completely risk averse because they're not going to be successful, right? You want somebody who knows, hey, there's a safety net, but I don't want to jump off the cliff and test it, right? I want to stay up here. That's pretty nice up here.
Yeah.
And so there's all these little components that we've put together, which frankly, some of them, most of them were not some master plan. We've just learned over time. But if you can go to people who are really high quality, who are experts at what they do, provide a safety net, give them the upside of being an entrepreneur, and say to them, we're going to come with capital, distribution, and operational help, and you can just do the thing you do. How many people would love to start a business, but they don't want to do accounting?
99%.
They don't want to do contracts.
Yeah.
They don't want to do, all this stuff. And so when we do that, we then can very quickly help them get into business, get to profitability. If we get you to profitability, what we are doing is not only one, making your business successful, we are also reinforcing our brand. If we reinforce our brand as a organization that can continue to incubate companies that get to profitability within 6 months and have a great return on invested capital, we will be able to do this over and over and over and over again. The number one limiting factor right now for us to be able to do 100 of these is my time.
Yep.
And everyone I think is looking from the outside, or a lot of people, and they're like, these guys look like they figured it out. I have no clue how to solve that problem. And it probably means we got to hire some people. We have to start to scale, right? I have to find people who are better than me at certain things. But because of the way we've built all these businesses, that's not in our DNA. And so we're at a point where we're realizing, hey, okay, we're hitting some friction of how do we do the next one and the next one after that and the next one after that. And so it's good to know what you're good at. It's also good to know, hey, there's a limiting, there's a governor here. We can't go faster. Let's go solve that problem. So that's kind of the journey that we're on right now, is trying to figure out how do we solve this problem. It's studying people like Constellation. It's studying Virgin Group. It's studying these businesses and trying to figure it out so that we're able to kind of push through this.
Got it. So Virgin, so Constellation, I guess even if you look at Vista, they just mostly focus on vertical SaaS. And then you have Virgin, who kind of just does everything. And then you have J. Paul Getty, who just oil, right, the whole time. How would you, it sounds like for you, not most of the businesses aren't related, right? They're
Icon Enterprises, Koch Industries, Berkshire. You can go through the line. One of the aspects that I think people on the internet got right is the obsession with holding companies. One of the things that I think that the people on the internet obsessed with holding companies got wrong is they're all trying to do this with businesses that are frankly not that attractive. And so it's almost like people have started to become obsessed with the idea of having a holding company rather than actually having a first principles thought process to like, how do you build a lot of value?
Yeah.
And if you look at Berkshire, everyone wants to look at it today. But if you go back and look, I forget the exact split, but it was something like 80% stocks, 20% operating business at one point. It was a stock. It was an investment company. They were just investing. They were taking money from a low multiple business that had free cash flow, and they were investing in the stock market. And they were great at it. But over time, Warren Buffett decided, you know what? Why am I going to own 15% of the company? I already did all the work. Why don't I just own 100% of the company? And so he set a target, and he talked about in the annual letters that he was going to go from whatever it was, 80-20 stocks to owned companies, to he wanted to get to 90-10. He wanted to get to 90% operating companies, 10% just an investment portfolio. So he started to buy businesses. And so don't judge your day one against somebody else's, year 50. Instead, what people should be doing, in my opinion, is going back and looking at what was their day one like? What was their first week like? Right? If you go and you look at Koch Industries, a lot of people don't realize Charles Koch and his brothers took over their father's business, which was not a good business. And then they basically started different companies based on where they saw opportunity. So they talked to a friend, hey, can you guys do this? They started a business. One of my favorite stories that most people don't know is somebody named Suleiman Olian. And almost nobody in America has ever heard of this guy. Suleiman worked at what is now today known as Aramco. He's from Saudi Arabia. He literally was like the warehouse manager. Just worked at the warehouse. But one of the things was he constantly saw a lot of the paperwork, the purchase orders, things like that. So he started to understand more about the business. And at one point, Aramco realized that they were going to have to build a massive pipeline to get the oil out of the country. And so they decided that they were going to make a very, very large investment over a number of years to do this. And not only were they going to make a big investment, but they were going to give priority to Saudi-owned businesses. And so Suleiman one day heard a bunch of people talking about it and basically, in a very kind of simple way, quit his job and said, oh, you need a construction company? I have a construction company. Give me the contract. Mm-hmm. He took the contract. He then went and he built a construction company, started servicing it. And then he went back. He said, what else do you guys need? He said, oh, you need dump trucks? I got dump trucks. Got the contract, did it. Long story short is the Olian Group became one of the largest conglomerates in the entire Middle East. But more interestingly is Suleiman was a very kind of globally focused individual. So at that time, somebody in Saudi being focused globally was very rare. And so he became obsessed with the idea of being able to use debt and credit to grow his business, right? He's got machinery and all this stuff. The problem is there wasn't a lot of banking infrastructure in Saudi at the time. And so he wanted US banks to lend him money so he could go and continue to build kind of his operating business and conglomerate. The bank said, hey, man, we love you. You're amazing. You come to America. You're very nice. We think you got a great business. You have no assets in America. And so because you have no assets in America, that means you have no collateral in America. And if you have no collateral in America, we're not lending to you. So he started to take free cash flow from his businesses and buy stocks on the US stock market so he would have collateral. Long story short is if you fast forward, I think like 2 or 3 decades, Suleiman became the largest owner of US equities in Saudi.
Wow.
And he became known as a white knight, where people would call him and say, somebody is trying to hostile take over my business. Will you invest capital? Will you join my board? Because he always took the approach, he goes, I will never vote against the founder. Sounds a lot like Founders Fund.
Yep.
And so he would constantly bring capital and he would bring kind of this worldly perspective. And he'd always say, if you are the executive, I will back you. I'm here to support you. And he looked at it as don't be hostile, instead be supportive. Well, if you fast forward to this, he became insanely rich, not only on his operating business, but then he built this massive portfolio in America because it all started because he simply wanted collateral. If you read this book that was written about him, which there's very few English copies, but it's written in Arabic, you take away 2 lessons. One, he only started investing in America, not because he even cared about the investments. It was like $500,000 to start. It's because he needed credit. And so many of these people who have been successful make decisions for reasons that you don't see on the surface unless you learn the story. And so really understanding the why behind the decision is hard when you don't talk to the person. But there's certain books, there's certain things that you can go and you can take a look at that will kind of help you learn that. And then the second thing that I learned from that is he operated and he invested. It's actually the same part of your brain. Do I buy equity in this person's business? And how are they compounding? What are their risks? What are their moats, right? What is their brand? What is the value that they're going to create? What's the compound growth rate that I expect? Versus what is the return on investment in my own business? What is my moat? What are my risks, right? How do I think about that? That sounds a heck of a lot like Warren Buffett talking about if you own a share, you got to think like an owner.
It's resource allocation.
At the end of the day, that's what it is. And, I think you get better at it with time. You get smarter. You see more situations. You get to see kind of feedback loops of, hey, I thought that was going to be a good deal. Thankfully, I didn't do it. It didn't work out.
oh, I thought this was going to be a bad deal. I didn't do it. Dang, that worked. But what lessons can I take? But just being thoughtful about that stuff and really trying to understand, kind of the mental game of all of this is something that, I think has really helped me.
Got it. All right, agency owners, if you want to grow faster, my partner Neil Patel and I, we are hosting live agency owner workshops in Beverly Hills, and you're going to learn how to get more clients. You're going to learn how to take yourself out of the day-to-day. You're going to learn how to recruit the right people, and you're going to be hanging out with people, like-minded people such as yourself. So if you want to learn more, just go to marketingschool.io/agency. Again, it's marketingschool.io/agency, and we'll see you on the other side. Before we move on, so can you give us, I guess, again, just rough numbers around the business, whatever you're comfortable sharing in terms of like, because you have an investment side, I'm like, okay, is that off your balance sheet? Like off these companies, like how does it all work? Whatever you can share just to kind of clarify it a little bit.
Yeah. So most of the investing is off the balance sheet. We do have an early stage venture capital fund. That fund makes, I don't know, I would say probably 8 to 12 investments per quarter. We've started out very small. My kind of background in early stage venture capital has been quite helpful. We have a partner that I think is, incredible. He's a great thought partner, but also he's a great kind of execution operator. And then we also have created a system where we've got a number of people that we've partnered with where we said, listen, you have a unique set of deal flow or kind of opportunities. If you're able to find those opportunities and bring them to us, then we're able to compensate you for doing so. And so the goal there really isn't today, hey, how do we make as much money as possible? What we want to do is we want to get exposure to the best founders in kind of the United States ecosystem. And over time, the size of the check will continue to increase as we raise more capital, we have more cash flow, all these different components. And so, that's kind of the only area where there's outside capital and kind of a traditional investment structure. But everything else is off the balance sheet for now.
What I love about what you do, especially with the incubation piece, is your founders are basically your executive team. And you're getting them, you're not necessarily coaching them all the time. You're finding them the resources they need to unblock them. Jensen doesn't say this exactly from NVIDIA, but like his 60 direct reports, right? They're just all badasses that make it happen. But I think I've read about this model more often than not. It's like, I think what we didn't talk about so much is like, maybe you also have a really high bar when it comes to hiring these people. Basically, when you make an investment, you're hiring them because you think they're an A player.
Yeah. It's always this balance, right? Do you go hire the super experienced person, or do you hire the young person who's very enthusiastic and has, kind of high agency and fast growth and eventually we'll get there. We have historically skewed towards the younger person. There's a lot of young people that work here, right? I would venture to say, I don't think we have a person who works at our company right now that is over the age of 45.
Wow.
Right? I would say, I don't know the exact average age, but if I had to guess, my guess is that it is under 30, right? So we just have a lot of people kind of in that 25 to 30 range is probably the sweet spot.
Yep.
And which that makes me a little bit older.
You're 36?
I'm 36.
Okay.
And so what we now are realizing is that can we get good at selecting? Do we need enthusiasm or do we need experience? That framework doesn't mean that the person with experience doesn't have enthusiasm or the person with enthusiasm doesn't have experience, but there are two different types of people to go hire. And so you have to ask yourselves, what is the job we need done? Mm-hmm. And then who is the type of person that can fill that job?
Right.
And what I found fascinating about this is the younger enthusiasm, kind of oriented people, they love working with the people with experience. And the people with experience who might be a little bit older, they love being around the young, enthusiastic people who kind of keep them, energized and excited and all this kind of stuff. And so you actually, to build a great organization, you need both, right? You can't have just one or the other, but it's really, really important to build a culture where one person could mess it up. And so how do you just obsess over, do we have the right people? Are they in the right roles? Are they paired with the right people that they're working alongside? Even to the point of, where are they sitting in the office? It sounds so stupid, but every company I've ever worked at, I'm like, do they just like let people sit wherever? Do they have assigned seats? Like everyone kind of treats it differently. I have very much become someone who believes in be intentional about every single thing. And if you just give people the right environment and the right ingredients, you'll be shocked at what they can accomplish if you've picked the right person and then kind of been intentional about those other components.
Yeah. Dude, speaking of intentionality, you talked about the last couple of years, people talking about holding companies. The one thing that's really irked me hardcore is, because I've been through this experience before, is the fact that, oh yeah, people are like, yeah, you should start a holding company and then you should hire a CEO and get out of their way, right? But it's like, no, dude, you can't like just go on the beach, right? Because literally that's what I've done before. You actually have to stay involved. And so like, you're not helping them run their companies, but you're staying involved, right? And I think to me, that information the last couple of years has been damaging. I think the holding company thing is interesting for sure, but the whole idea that you can just hire a CEO, and a lot of these CEOs that I see being hired are pretty inexperienced. Like, it can be pretty damaging. I feel like sometimes it can be hurtful information.
Well, one of the things in intentionality when you're building something is like, how do you describe it? And so I never use the term holding company because I don't think that's what we're building. Instead, I think about it as a global investment firm.
Yeah, I love it.
And that's what we're doing. We're investing our time. We're investing our money, right? We're investing our reputation, our social capital, the distribution channels we have. Like, we are investing. And we have a portfolio of investments. And we have cash flow that then is used. And every time we get $1 of cash flow, what is the investment decision that we make? Do we reinvest? Do we allocate somewhere else? Whatever. And so I do think that holding companies have become a simple way to just say you're lazy.
Yeah. Yeah.
And that may upset some people. That's okay. But you have to really ask yourselves, are you trying to build great businesses, or are you trying to get the fruits of great businesses without doing the work?
Mm-hmm.
And, I only say this as somebody who I'm tempted on a daily basis. We have CEOs that run our companies, right? You would be shocked at how many times a day I get on a call, not a week, not a month, not a year, a day. I get on a sales call for something that is $5,000 a month.
Mm-hmm.
And people will literally say, oh, this must be important to you. You're on here. And what I almost want to say back to them is, yeah, every dollar of revenue is important to me because that is our oxygen.
Mm-hmm.
And so how many people who have multiple businesses are on the sales calls, right? How many of them are in every weekly team meeting? How many of them are spending time every single day talking to the different founders or CEOs, talking to them about whatever problem that they're facing? And so if you then take it a step further, how many of them are posting about their businesses and all this stuff? And so it goes back to, you don't have to micromanage if everyone is aligned in terms of outcome. But what you do get to do is you get to be in the trenches with people. And it helps from a leadership standpoint because people say to themselves, you know what? He's not asking me to do anything that I wouldn't, that he wouldn't do himself. But also they see that you really care. And I think that we have underestimated how important just caring is when it comes to leadership. And so, I'll give you a great example. This past weekend, we had a bunch of chairs get delivered, like office chairs, and they all came in boxes. And so I came here on Saturday and I started to assemble them. Somebody came into the office today and they said, how do these chairs get assembled? I said, well, somebody put them together. And they said, oh, who did that? I did.
Mm.
And then the next thought, I could see it in their head. They said, should I put one together? I said, it's not good use of your time, right? I had some extra time. Like we'll figure out whatever. But like that little thing, I didn't do it because that person's going to walk in and say that.
Yeah.
But that little thing, all of a sudden they realized like, wait a minute, that guy came here this weekend and put together the chair and they did another one, right? And by the way, like they were actually kind of hard to put together, right? It took me a while to figure out. And so,
no job is too small.
Yeah, but it's just like if that is really truly ingrained in an organization, you can feel it, right? But if it's not, and people just talk about it, it's not very good. I love Keith Rabois. He's got this quote. He says, "You don't create like your company ethos. You just document them." So if you sit down and you're like, "Oh, we're gonna move fast. We're gonna do that," like whatever. Yeah. Nobody gives a shit.
And plus, that shit changes every 60 days too.
Of course.
Yeah.
But if you sit down and you say, "What do we actually do?"
Mm-hmm.
Man, we're fast. And everyone in the room feels it.
Mm-hmm.
Write that one down.
Yeah.
But if you write it down and you're not actually moving fast,
it feels a little.
Well, immediately everyone in the room is just like, yeah, okay, whatever. Like whatever the next one that you write down, like, yeah, whatever.
Yeah.
Right.
Yeah.
And very quickly, it's just like nobody believes in whatever the ethos of the business are.
Right.
And so I love that framework of just like document what you do at the business. Don't prescribe it, because I really do think that that is how you kind of authentically understand what the business is,
Right.
and what your strengths are, what your weaknesses are, and kind of where the opportunity is.
Plus, what else? I just, on a side note, this is very intentional. This office, the people here, this podcast setup over here, you're not spending as much time out there tweeting or creating as much content as you did before, right? You're actually in the trenches, you're operating, and you're making investment decisions. So I think it's more so. Sometimes it's not the loudest people on these platforms. It's often the ones that are kind of behind the scenes in the trenches that are making it happen.
When I was early in my career, I used to get really excited when we were doing stuff, and I would start talking about it as we were starting it. And what I realized is, if I talked about something before we did it, it made it a lot easier to not do it, because you kind of felt like, I already told everybody about this.
You wouldn't feel embarrassed if you didn't deliver?
People forget. Right? They kind of just like, oh, I saw that thing, that was cool. But like, how many people actually are like, whatever happened to that thing I heard about? Right?
Yeah.
And so now, almost always, I don't even know if I can think of over the last year, if we have announced a business that isn't already either one, profitable, or two, have customers. And so, we announced the e-commerce business, it was profitable. When we announced Professional Capital Management, the entire firm, we'd already incubated 9 profitable companies. And then we said, hey, here is what we're doing. And so I do think that there is this element of having distribution is helpful if the substance is there, if the product is right. So it goes back to our marketing conversation of like, if you got the right product for the right market, that's 90% of the work. But that 10% of marketing definitely helps, right? To shine a spotlight on it if you know you got the goods. But I think that it takes maturity and experience. And like, it's laughable for me to be like, oh, I'm mature. But I'm definitely more mature than I was 10 years ago.
You've matured.
Yeah, like 10 years ago, right?
Yeah.
But like, we started at a pretty low base. So like, they didn't have to move far to be able to get some kind of improvement. But it does take this maybe like self-confidence of just like, I know that if you say to me right now, you take $100,000 and you have to create a business in 6 months that does $1 million of revenue and has to be cash flow positive, 99 out of 100 times I will be successful doing that. I don't know what the idea is yet, whatever, but like, we'll figure it out. When you know that you have that skill, you are able to kind of not worry about the nonsense. You end up going from somebody who wants people to think that you can do something to you don't care. Whatever. If you don't think I can do it, fine, whatever, right? I know what I can do. And so I do think there's an entire generation of entrepreneurs. I almost call it the social network generation, where they all watched The Social Network. Everyone got super excited about business, right? It was like the greatest thing that ever happened, but it was also the worst thing that ever happened, because everyone fell in love with venture capital and private markets and software and all this stuff. All of those people are now hitting kind of the zone of 30 to 45, maybe 35 to 45, where you start to get that self-confidence because now you know what you can do. And I think that that is very bullish for kind of business, small business, entrepreneurship, tech, et cetera, in America, is that now a lot of these people have got a couple of reps, and the average age of a successful founder is 42 years old.
Doesn't that suck? It's like you have to go through your 30s to really understand that. There's a story from a friend shared where he met this billionaire heiress, right? And she didn't build any of the businesses, but she said, hey, you know what? Like, I got some advice for my friend who's another entrepreneur. He's like, look, all my uncles, my brothers, my father, they've all started multi-billion-dollar companies, right? And the one thing I've learned from all of them is that they focused on just one business for 30 plus years, right? But like most people, if you're in your 20s listening to this right now, you just don't want to, you want the results like yesterday, but we're in our mid 30s now. It's like, yeah, you don't realize until maybe your mid 30s or so that this stuff takes a long time, and most people just don't survive long enough.
And how fortunate are we that you realize it in your mid 30s? Some people don't realize it until they're 65.
Or till they're dead.
Right? Yeah.
Or ever.
And so if you can learn it in your 30s, you still, God willing, have 30, 40 years ahead of you. And so you can actually apply it.
Yep.
But there's a lot of people who they don't realize it, that early. And so, again, I'm somebody who takes a lot of pride in how much I read, and, I learn a ton, and I could sit here and tell you story after story after story that, I've come to learn over time. But the part that I think you said, which is so true. You have to go through it.
Mm-hmm.
And so now there are times, and frankly, I almost feel like I'm getting a test run as a parent because my kids are still really small.
Yeah.
But there are people that they are doing something maybe inside one of our businesses, and I think it's a mistake.
Yeah.
And I have to hold my tongue.
Yeah.
Because I know I went through the same thing.
Yeah.
Somebody held their tongue for me,
Yeah.
let me, smash my head against the wall, and then come over and be like, that hurt?
Yeah. You know what they say?
Don't run your head into the wall.
They say, okay, there's a difference between I don't know who said this, but it's like putting your hand on the stove, like that's going to leave a mark versus like walking out into the snow, right?
Mm-hmm.
And you can let them walk out in the snow whenever, but you got to watch it when you let them put their hand on the stove.
Yeah. And I think it goes back to like, we have great financial controls in terms of like reporting and stuff. And so we really understand what is the health of our businesses? What does cash flow look like? What does their balance sheet look like? All these things. And so, if a business ever got close to being in a dangerous situation, we very quickly would see that in advance. We'd be able to, have a conversation, figure out what needs to do to kind of remedy it. And then we go and we move forward. And so, I think businesses get in trouble, frankly, because absentee owners. And then you also get kind of a lack of knowledge, right? It's like you gut feel know it's not going well, but no one wants to look because you think that by not looking at the P&L, like it'll just resolve itself. Instead, if you can create a culture where you say, no, like what is the number, right? And we have, by the way, we have people who've started companies who literally the first time that they get a P&L from our finance team, they respond with, so I'm embarrassed to say this, but like, I don't know how to read this. Let's sit down and talk about it. Like, let's go through it, right? By the way, I'm not going to give you an accounting class, but I'll give you a very quick overview of what I call like owner's math.
Right.
Right?
Yeah.
Like, see this number? This is the balance sheet, right?
Yeah.
So that's the cash in the bank. If that number goes up month over month, good. If it goes down, bad.
Yeah.
Right?
Yeah.
Like, very basic stuff. You can do that in an hour.
Mm-hmm.
All you're trying to do is you're trying to take someone and say, look, you're an expert at one thing. Let me give you enough of the, skills to pick up these other things so that you can use it as kind of guiding, post or rails for the business. And then, by the way, if you have a question, ask. And if you ask a question you think is dumb, somebody here is going to help you.
Yep.
No one's going to laugh at you.
Plus, we've all been through it.
Of course.
Yeah.
Well, everyone's got the first time they look at, an accounting, like a P&L or something, and they just, looks good.
Yeah.
Right?
Yeah.
You got no clue.
Yeah.
And frankly, I do this for a living, right? I would say that maybe I've got average to slightly above average understanding of kind of financial metrics. I'm not a CPA, right?
Yeah.
I definitely am not going to run our finance team. But I'm in awe every day of people I see on Twitter who will get, public company balance sheet and they will just tear it apart.
Oh my gosh. Those are the best.
And I'm just like, this is like a math wizard, right?
Yeah.
This is just a savant
and
when it
you
comes
probably
to
only
financial
understand
analysis.
like 20% of it, at least for me.
Yeah, and they just like circled like in big red, some number, like, see this number right here?
Yeah.
Like,
Got
CAC
it.
is this, whatever. And I'm like, oh, this company's like a short, right?
Yeah,
Like,
yeah.
it's going to zero.
Yeah.
And so just, everyone's got their skill set. Everyone's got, a passion. Like I wouldn't enjoy doing that. But for the person that does, wow, let's go find the best person at that and have them come teach us or come work here. Really, I think it's kind of my focus now.
Got it. I love it. I want to switch gears. And actually, before I do that, so I imagine if you're buying into a company, let's say it's $100,000 in 6 months, you want them to get to $1 million or so, or maybe a year. Your reporting is probably on a monthly basis because they're not getting that much new data. I guess it depends on the business. If it's e-commerce, the data's coming in quickly. And so I guess my question for you would be, how long are you looking at scorecards for each company? Is that like a weekly thing? Is that a daily thing? Like, how does that look? A monthly thing?
If you wait a month, you die because it naturally is a slow reporting cycle, which means that you're going to have a slow operational tempo. And so the slowest that we will operate is weekly updates. So every CEO sends me a weekly update. Frankly, the update is more for them than it is for me. I read them, I respond. It's a good way for us at the end of each week to kind of check in on, hey, here's the things I'm thinking about. Here's the problems I need help with. Here's the questions I have, that type of stuff. But even for our own business, I write one, and there's somebody I send it to, is a friend of mine. And it makes me sit down and where are we? Are we doing well? Or are we not doing well? What do we get done this week? What do we got to focus on next week? What are the problems right now? Right. And so it's just this clarifying document. I'm a huge believer in forcing functions to create clarity. We're onboarding a new employee this week, and this role is very important. And so I sat down, and over the last couple of days, I've created a manual for this person's job.
Mm-hmm.
This manual right now is like 6 pages, probably end up being like 8 pages. And I started out with, what's our philosophy? What's the framework that I use to make decisions for this type of role? What are the things that they need to understand? How will they be judged in terms of success? What are the big projects and then the mundane daily tasks, right? And just started writing all this stuff down. This is somebody who's been doing this job for almost 20 years. And I'm writing the manual, right? I'm an idiot, right? Here I am going to tell them. And I was talking to this person on the phone today, and I said, hey, I'm so excited for you to come. Like, you are going to level up the organization. By the way, I put together this manual. And the reason why I wrote this manual is, one, for you and I to have extreme clarity in what I think this job entails. Your job, when I send you this manual later today, is to take a big red fat pen and destroy it, because you're the expert. Tell me what's wrong.
Yeah.
Where are we misguided? What are the assumptions I'm making that are inaccurate, right? All these things. By the time that person starts, we will be in a fantastic place, because there'll be alignment on what is their job. How should we measure their success? What are the mundane daily tasks? What are the things they're excited about? What are the big projects? Like, all these components that I think people just kind of, maybe they verbally talk about it, in a wishy-washy way, but by writing it down and both of you having, kind of edit control of a document, very clarifying. And so I think that's a huge component. And then one other thing that I would just say, in terms of updates and things like that, or we always use a framework where get to cash flow positive, keep a certain amount of money in the bank. And each business is different. I would say 3 to 6 months is probably the average range. And the reason why we only keep 3 to 6 months of cash in the bank is, one, I want our partners to get distributions. If your business is working and it's profitable, I want you to take cash out of the business, because when you get that distribution every single month, guess what? You're hype.
Yep.
You're ready for the next month for it to be bigger.
Yeah.
Right. And so why do I know that? Because that's how I am.
Mm-hmm.
When I see the distribution come back, I'm like, oh, this business is rocking.
Give me more.
Let me go spend more time, right, to help them grow faster.
Yeah.
So that's one. The second thing is, there's nothing like feeling you're 90 days away from failing.
Mm-hmm.
And so you have this like almost false sense of your back's up against the wall.
Mm-hmm.
Of course we can put more money in. They know we will put money back in if it absolutely is needed.
Yeah.
It doesn't matter. You just see the bank account. You do the math in your head real quick. We spent X dollars. We got Y dollars in the bank. That's 3 months.
Yep.
Let me go send some emails.
Yep.
Let me go do some sales calls. Let me go, kind of fix the product, whatever. And so I do think that there's these little things we've learned around motivation and incentive alignment and stuff like that, which if you structure things correctly up front, you realize that my job is not to make us successful. My job is to make our partners successful. And if we make our partners successful, there will be plenty of money and reward for us, because we have set it up in a way where when they win, we win. When we win, they win. And so it goes back to, it's hilarious. Buffett and Munger are right? The incentives do drive the world. And so is it possible to hold the idea that Buffett and Munger are right philosophically? Buffett and Munger are right about so much of what they've talked about, but also they're wrong probably about Bitcoin. Yeah. They probably, from an ethical standpoint, did some things that in hindsight, people look and say, how could the guy who's preaching about ethics be in a certain situation with his personal life?
Yeah.
Or, there's a lot of sugar flowing out of the companies they own.
Yeah.
Right. Again, people are complex. And so trying to, what should I learn from this person? And what are the things that I shouldn't learn from this person? And it always reminds me of the story of, there's an alcoholic father and he's got 2 sons. One's an alcoholic, one's not. And they go to the first son who's an alcoholic and they say, why are you an alcoholic? And he says, because my dad was. And they go to the second son who doesn't drink and they say, why don't you drink? And he says, because my dad was an alcoholic. And so there's kind of 2 takeaways, right? You can replicate and imitate, or you can ignore and diverge. But those 2 people grew up in the same household with the same father. And so really ask yourself, like, what am I taking away to replicate and imitate? And what are the things that I want to diverge and kind of ignore?
Totally. I want to come back to, and then just a couple more things from my side, but the report that you write weekly, who do you send it to? Is that like a friend of yours? And like, does he or she reprimand you? Like what's the setup there?
I don't want to say who it is, but it is a friend of mine. Sometimes I show it to Polina as well, more so because she just has a very kind of different way of thinking than me. And I think sometimes she's just like stop spending so much time on this report thing, right? It's the weekend. But when I send it to this friend, I would say that half the time they respond. The other half the time they don't. I used to like be offended, like, I put all this time, whatever. And then I realized, no, this is for me, not for them.
Yeah.
They don't have an economic interest in the business. They're just a friend that I think is smart. And frankly, I like the fact that they're in a completely different industry. They know nothing about this. They really couldn't care less about what we're doing. But every once in a while, they'll have a very profound thought or piece of feedback, and it makes me think differently. Because if I have a business problem that's a known problem, I know who to go to. I have enough friends. I have enough people that, I'm connected to. I can find someone who's dealt with that situation. Hey, help me understand this. Maybe I don't get it right, but at least I can, seek out help. But really, I think that other than the update is for me, I'm looking for somebody who can see blind spots that I have no clue. And most of my friends in kind of the business world, they have the same blind spots. Right? They're just, we all, maybe we, look different, sound different, but like we think, more differently than not.
So this person's not an entrepreneur investor?
No.
Okay, got it. Don't give the exact thing that they do, but like what's in the range? We'll give it away.
Give it away. Yeah,
Okay. All right. So this person's pretty popular. Okay. So I want to talk about the rebrand. So I only know you from 2021 when we moved to Miami, right? And that was like the hoodie pump, right? And that was the Bitcoin pump. But now we have like presidential pump, right? Where you've got the flag and everything, those of you listening, and you've got the suit, right? So, what was the thinking behind all this? And yeah, let's just go there.
I think there's a couple of things. So before 2020, I wore a suit some days with a tie, some days with not, often, if not every day. I lived in New York. Obviously, when you are trying to raise money, when you are kind of in a more of a finance-driven environment, that is not abnormal. And so I would do that. When I went on TV, I always wore a suit and tie. And I actually think that's one of the reasons why I was able to go back over and over again early on, was there was an element of like, he takes this seriously. They would bring on other young people. When I first started going on CNBC, I probably was 30, right? Maybe 31.
And you're a hoodie pump on CNBC back.
Well, in the beginning, it was suit and tie.
Oh, okay, right.
And I took it very seriously. I wanted to do a good job. Frankly, I was nervous at times, not because of the kind of content and the moment, but more so like, hey, it only takes one or two mistakes here, and they don't invite you back, right? And so it was like very much like let's go do this and do this the right way. And I got a great piece of advice, and I actually don't even know if I've ever told him this, but Josh Brown, downtown Josh Brown, on Twitter. He and I met in his office or at his office. And I remember asking him something to the effect of, what's your advice for me? And he told me two things that I thought were very profound now in hindsight. The first was take it seriously, essentially. And I forget exact language he used, but the whole idea of like, you're wearing a suit and tie, like, good job. Like, stay on that path. The second thing he told me was whenever they ask you to go, say yes. Because reliability is so important to producers, bookers, etc., that when they need someone and they think of you, you want them to reach out. But if every time they ask, you're like, oh, I'm busy, I'm this, whatever, eventually they just stop asking, right? And the lifeblood of going on television or podcasts or whatever is people reaching out. So you want to be reliable, you want to be available, etc. And so when 2020 happened, I think the world just took like a U-turn and became very unserious. And you see this all over the place, right? Unserious in things people were talking about, the way people acted, all this stuff. And I, no different. I'm a human. And I remember explicitly the moment that I realized we had diverged. And it was like on being in a slow motion car crash, because even though in this moment I realized what was happening, I couldn't stop the direction of travel. But I was in Miami and I went on CNBC remotely, and I wore a black hoodie, and somebody took a picture from 2019, 2018 of me in a suit and tie on set. And they put it next to the picture of me in a black hoodie. And over the picture of the suit, they said, "Please, sir, can I tell you about Bitcoin?" And over the picture of me in a hoodie, they said, "Now I own your fucking country." And the entire thing was just like, oh, look at all these Bitcoin people. Everyone laughed at them. They were walking around asking for permission. Now they just ask for forgiveness. They don't care. It's kind of like we were right, etc.
Yeah.
And in that moment, I remember mentally thinking to myself, how'd I get here? I would have never pre-2020 gone on television and without a suit and tie on. Right. That's just where we were. And that was, kind of and it was okay. Yeah. And then I saw other people start to do it. And I wasn't the first one, but like it just became okay. I don't know if it was a remote environment. I don't know if it was the times, whatever. So long story short is that continued for like a year. So even though I recognized it, I couldn't stop the direction of travel. And it culminated in, we started to do a live show every day. Mm-hmm. And frankly, the show was fun. It was amazing.
The best business show. Yeah.
What a name.
Yeah.
What an incredible name.
Great name.
If we break news and you have to cite us, imagine being a business publication that has to cite the best business show. Mm-hmm. What an incredible troll, right? But that's a perfect example of the time in which we were living in.
Right.
My brothers and I had a blast. We couldn't have had more fun. Who doesn't want to hang out with their brothers and talk shit, look at the market, talk about businesses, invite our friends on, right, do all these things. But it just kept being a more and more unserious environment in society, but also in what we were doing. And so when we moved back to New York, I remember saying,
but by the way, before you continue, so like, is that, because we had moved to Miami around the same time and a lot of people moved there. Do you think Miami was also like, not saying Miami's bad, I think we both love Miami still, but you going back to New York, me going back to LA, was that part of the seriousness equation as well?
I don't know. I don't think that Miami is like an unserious place. I think that would be, an inaccurate description. I think there's a lot of serious people there.
Right.
I think that it was more the time of kind of like the fog of COVID, type thing, where it was more like a 2021, cheap money is flowing. Everyone feels like they're geniuses. We're all like moving. So there's like the disruption to your daily routine. You're establishing new routines. There's new people showing up. Like there's all these things that are happening. And so, coming back to New York actually had very little to do with that. I think that it was much more, I wanted to optimize for three things. I want my wife to be happy. She loves New York City, loves it more than any other city in the world. So like, pretty good reason. Two is I wanted to have the highest density of smart, ambitious, intelligent people. Mm-hmm. And I was willing to sacrifice immense amounts of other things in my life to be in that environment. And so I think people looked at it when I moved back to New York and they were like, what about this? What about that? And they would be surprised. Like, you're right. Crime is a problem. Yep. You're right. This is a problem. Mm-hmm. You're right. It is not as clean. All those issues. But when I stack rank my priority of what is the criteria or rubric of where I want to live, being surrounded by the highest density of smart, intelligent, ambitious people was number one.
Yep.
And so New York City was the place for me. Right. And then the other piece of it, I think, really came down to if you put yourself in that environment, it's really hard not to be ambitious and excited when you walk around this place. There are other cities. I grew up in Raleigh, North Carolina. There are, I don't know, a handful of people probably in that city that are worth over $100 million. Everyone knows who they are. They're the big fish in the small pond. Incredibly gracious and nice people, incredibly successful business-wise, but really hard to push yourself, even if you're only worth $1 million, $100 million, whatever. It's just hard because it's a smaller city, etc. When you walk down the street in New York City, it's real hard to be cocky.
You feel it. Yeah.
There's always somebody.
Yeah.
More money, more success, bigger apartment, whatever, cooler vacation, whatever the thing is. Oh, you think you're a big dog because you got a jet? That guy's jet goes twice as fast. Oh, you think you're a big dog because you got a helicopter? Well, yours doesn't seat 12 people. right? You just go, and it's just there's all these things that, again, it goes back to like, can you be surrounded by the highest density of smart, kind of hardworking, ambitious, et cetera, people? I think New York, right now is probably the best place to do that.
Love it. All right, last question for you here. What's one thing you changed your mind on in the last year?
A lot. I change my mind on stuff often, but one of the chapters in the book is write your ethics in stone and your opinions in sand. And so knowing what to change your mind on, I think, is pretty important. But I'll give you kind of a business one and a personal one. I used to think that an office was a utility. I don't care what it looks like. Like, I'm like the classic dude who would live in an apartment with nothing on the walls, right? Like, why did the office, same thing. Why would we spend money to paint the wall or hang a picture or whatever? Duh.
Yeah.
I read Bloomberg by Bloomberg, Michael Bloomberg's autobiography. And in it, he talks about how he always spent a lot of money on the office because he wanted it to inspire people. He wanted it to be an attraction. He wanted people to be energized when they went to the office. He always provided them free food or coffee or whatever because he wanted them to come to the office, be happy to be here. I think he's right. So I changed my mind. I said, hey, you know what? We should start to upgrade the office. We should start to figure out how to do this. Again, inside, I'm still the guy that's got all white walls.
Yeah.
So I've had to lean on other people. Right. Now, when I see it, I know it looks nice. But if you tell me, operate from scratch, I'm probably not the best at doing it. But we're trying. And then in my personal life, I think that I have significantly changed my mind in terms of now I optimize for day-to-day urgency and decade by decade patience. So if you think about that kind of dichotomy of how do you go really hard, really urgent every day, but also understand like, hey, we're going to play this game for 30 or 40 years. Like, it's okay on some things. And I think that the changing of the mind there was the decade by decade patience, because it used to be day by day urgency. Like, why is this not happening immediately? Right. And by changing my mind, it really was through reading and kind of understanding a lot of these stories. But it kind of brought like a peace that all of a sudden I realized, oh, just like do the right thing every day, do your work, pick your head up. Oh, last 6 months, look where we were, look now.
Yeah. And I'm just going to keep going.
Yeah, just do it again. And I've always loved, talking to an entrepreneur who's like, yeah, so like we started this thing, it's going okay. We're doing $10 million in free cash flow after, 2 years. You're like, it's going okay. Like, what do you mean? Like, yeah, we're going to try this other thing. Talk to him a couple months later, like, now it's doing like $50 million. Like, dude, this thing is incredible. Like, yeah, I don't know. I'm thinking about shutting it down. And you're just like, okay, like you're playing with a different wavelength. And so how do you get there is kind of everyone's on their own journey. But once you, kind of get to that place, I think it's pretty empowering.
Love it. Well, Pomp, this has been great. What's the best way for people to find you and find out more about the book?
Just go buy the book. That's all. That's my thing right now. And I probably shouldn't say this, but I will. I'm a competitive person as much as maybe I have serenity now and some peace of mind. I want to sell more books than my wife. And she's going to kill me for saying that.
All right, let's make it happen.
Like, she's an amazing writer. Her book is excellent. It's called Hidden Genius. But I know how many she sold. According to the last update, down to the book. I want to sell more than her.
All right.
And then I'll go buy an extra one for her just so she can beat me back. But I got to sell more than her. And she'll hate that I said that out loud, but whatever. It's the truth. And so you can just go how to live an extraordinary life or just search my name on Amazon and you can get it there.
All right. Thanks for doing this.
Thank you for having me.